Well, hello, everyone. Welcome to Mortgage Monday on April 16th. And today the topic is going to be pre-approvals and pre-qualifications. And it's actually a pretty short topic, but hopefully does contain some useful information for you. And at the end, like always, we will have a Q&A for any questions. So let's go forward and let's start with pre-approvals. The future belongs to those who prepare for it. American essayist Ralph Waldo Emerson once said, "It's great advice for home buyers. Unfortunately, without proper preparation, many buyers get lulled into the mistaken notion that if a lender pre-qualifies them for a mortgage, it means that they have been pre-approved for the home loan. There's a world of difference between these two terms. If you've ever been confused by the two, I'll bring you up to speed on how they differ and why a misunderstanding can mean disaster for borrowers. Pre-qualifications. Getting pre-qualified is the initial step in the mortgage process, and it's generally fairly simple. You supply a bank or lender with your overall financial picture, including your debt, income, and assets. After evaluating this information, a lender can give you an idea of the size of the mortgage for which you qualify. Pre-qualification can be done over the phone or on the internet, and there's usually no cost involved. Loan pre-qualification does not include an analysis of your credit report or an in-depth look at your ability to purchase a home, which is why it can be done so quickly. The initial pre-qualification step allows you to discuss any goals or needs you may have regarding your mortgage with your lender. At this point, a lender can explain your various mortgage options and recommend the type that might be best suited to your situation. A pre-qualification letter can be issued stating the purchase scenario you are pre-qualified for, and this letter can be used to make offers. Because it's a quick procedure and based only on the information you provide to the lender, your pre-qualified sum is not a sure thing. It's just the amount for which you might expect to be approved. For this reason, being a pre-qualified buyer doesn't carry the same weight as being a pre-approved buyer who has been more thoroughly investigated. Pre-approvals and the two types. Getting pre-approved is the next step, and it tends to be much more involved. There are typically two types. For each, you'll complete an official mortgage application, then supply the lender with the necessary documentation to perform a check on your credit history, as well as to support the numbers that you gave. Once financial documentation is obtained and application is taken, a lender can submit the purchase scenario to an online automated underwriting system offered by Fannie Mae or Freddie Mac. This is the most common type of pre-approval. It can be done somewhat quickly, with most of the time taken up by the gathering of the applicant's documentation. Once submitted online to the investor, the purchase scenario is evaluated by their software and a decision can be obtained in seconds. If approved, a pre-approval letter can then be issued with the specific mortgage amount for which you are approved. You'll also have a better idea of the interest rate you'll be charged on the loan. However, this letter will include a condition that the income, credit history, and assets must still be reviewed and found to be acceptable by a human, the lender's credit underwriter. This letter is not yet considered to be a commitment to lend. The second type of pre-approval goes one step further. The application and supporting documentation is submitted to an actual underwriter for review. It could take at least a week to get, but the result is an actual commitment letter to lend a specific loan amount without conditions related to income or credit. The only conditions that remain are those related to the property that's yet to be found. Obviously, this puts you at an advantage when dealing with a potential seller, as he or she will know you're one step closer to obtaining an actual mortgage. One note on timing, though. Don't apply for a pre-approval until you're fairly certain you'll want to buy a home within the next 90 days. Unlike getting pre-qualified, a pre-approval involves requesting a copy of your credit history. A pre-approval will show as an inquiry on your credit report, and it's only good for a certain amount of time. So that is actually it. That's the presentation for today. And now I'll just open it up to questions if you have any. You can use the chat, or you can just unmute Okay, there are no questions. A few more seconds. Great. Okay, thank you. Thanks for calling in. We'll upload this training video to the internet and to my website today if you would like to review it. Thank you very much. Have a great day.